Hello and welcome back to the Finbus channel. This is your friend Shameel Sajjad and this is where you come for in-depth content on finance and business. Today we are going to talk about real estate investment trusts. Before we move on to the video, I would like to request you to subscribe to this channel if you have not subscribed as of yet. Please share the content of this channel with your friends and family. All of us want to have quality real estate investments in our investment portfolio. But real estate investments require huge capital outlays and many of us are not able to gather that much of a capital. Real estate investment trusts provide a solution to this problem and makes possible real estate investments even with very small cash outlays. Real estate investment trusts either invest in a diversified portfolio of real estate properties or engage in the financing of real estate development. REITs in India are governed by the Securities and Exchange Board of India Real Estate Investment Trust Regulations 2014. According to this Act, real estate investment trusts should invest at least 80% of their capital in completed rent generating properties. Only 20% can be invested in other investments. The Act also stipulates that at least 90% of the income generated by the REITs should be passed on to the investors, and there should be at least 2 payouts in every financial year. This means that you have an assured payout every 6 months at least. Real estate investment trusts are of 2 types: equity REITs and mortgage REITs. Let's have a look at these 2 types of REITs. Equity REITs invest in income generating real estate properties. The capital gains from the sale of properties is another source of income for equity REITs. The investors are the owners of these properties in the ratio of their investment in the REITs. The income from these properties are shared between the investors also in the rate of their investment. Mortgage REITs are debt funds that lend money to real estate developers. They issue mortgage securities or purchase such securities from the market. They don't own any real estate properties, but they take the role of a lender to real estate developers. So, the income in such funds is the interest from the securities issued or purchased by such funds. Now let us take a look at the advantages of REITs and also how investing in REITs is better than purchasing real estate properties on your own. REITs give you steady returns. They have demonstrated long-term competitive performance through steady dividends and long-term capital appreciation. The dividends from REITs are tax-free. That is, you don't have to pay any tax on the dividends received from a REIT. This is because the income from REITs is taxed in the hands of the fund. Real estate properties are very illiquid assets. That is, you cannot sell off your real estate property immediately when you want to liquidate your cash. REITs solve this problem. As the units of REITs are listed on the stock exchange, any investor can immediately sell off his units and convert that into cash whenever he wants to do so. The operations of REITs is regulated by the Securities and Exchange Board of India, that is SEBI. All the data associated with the operations of REITs are always available to the investor in the public domain. This makes the operations of REITs very transparent. Real estate investment trusts invest in a diversified portfolio of real estate assets. So, this solves the problems associated with investing in a single property or in a local property market. The investor will not be affected by the problems associated with the local problems or the problems associated with a single property. You can even achieve global diversification through the investment in real estate investment trust, which is not possible when you invest in physical properties. Investing in real estate properties can get very tedious at times. Investing in real estate properties come with a lot of tasks like documentation, vetting the documents, managing your premises, dealing with the local bodies, managing your tenants, etc. Real estate investment trusts relieve you of all these activities. All of these are taken care of by professional property managers, and it is taken care of by the real estate investment trusts. One of the greatest advantages of REITs is that it makes real estate investment affordable to anybody. According to the SEBI regulations, the new subscription to a REITs issue should be at least 50,000 rupees. But REITs are structured as exchange traded funds and the units are listed on stock exchanges. So once the new fund offer is complete, anybody can go and buy the units of a REIT in the stock exchange. One unit of Embassy Office Parks, which is the first REITs issue in India, has a face value of just 300 rupees. Anybody can buy the units of these REITs from the stock exchanges in multiples of one unit. The first real estate investment trust in India is the Embassy Office Parks. This is a joint venture between the US private equity firm Blackstone and the Embassy Group. Embassy Office Parks owns over 33 million square feet of office space. I have given the details of Embassy Office Parks and Mindspace, which brought out its IPO a couple of days back, in the description box below. If you want to study further about these two REITs, you can make use of the links that are given below. I hope this video on REITs was useful to you. Thank you for coming back. Thank you for spending your time. Please share and subscribe this video. Till we meet next time, it's bye from me. Thank you.